Hello everybody, I'm Pete Renzulli and welcome back to video number 2. During this short video, we're actually going to get a little bit more into the 5 steps and give you a preview of what we're going to be talking about in a lot more detail at the Active Trader Super Conference, as you can see here on October 6th and 7th. One thing I did neglect to mention in the prior video, I didn't reach all the way down to the bottom of the sheet that I was following, is mentioning Rob Smith, one of the speakers. He was the last speaker besides the surprise speakers that we haven't mentioned yet. If you have not had a chance to see Rob live, the last 3 Active Trader Summits that we did, which are only one-day events in individual cities, Rob by far got the biggest standing ovation at the end of his presentation. He will walk you through how his experience from being on the floor in Chicago led up to the strategy that he actually unfolds now. And you'll be able to see a video if you scroll down a little bit on the Super Conference registration page. You'll be able to listen to a part of Rob's presentation, and we're also going to post very shortly what Rob's monitor setup is, essentially helping him go over the all the stocks in the S&P 500 every single night. He has 8 27-inch monitors, and everybody, I'm going to assume at this point, understands candlestick patterns, or at least what candlesticks look like. I've been trading for a very long time, which I explained in the previous video. Rob has taught me something recently in his strategy that makes so much sense that I've added to my trading. Just coming to listen to Rob's presentation alone will be worth the 2 days. It is fascinating, entertaining, but more importantly, not a question in my mind will you be able to take what Rob teaches you and apply it so quickly, you'll be like, how was I not looking at that? It makes so much sense. That's actually what I said. All right, so Rob Smith will also be there from Chicago. If you go to T3Live.com, Rob runs the private mentoring room called Smith is in the Black. So what we're going to do now is I'm going to discuss very, very briefly what the trader path is so that we can start to get a little bit of clarity on. Remember in the last video, I had mentioned all 5 of the keys the keys to trading success. I'd like for you to come prepared to the event with 3 questions for each of the 5 steps. So we're going to get as much. Now, here's the thing. If you don't have the chance to ask during the end of everybody's presentation during a Q&A that we're going to do, please make sure you attend the cocktail reception so that we can have a lot more less structured but informal conversations about questions you might not have had. Again, I can't stress this enough. You want to be at the event because there's stuff that you see live and questions that go back and forth that you just don't see during the busy trading day. So there's a lot more depth to what we're talking about. So mapping out your trader path is very simple. And as I had talked about in video number 1, let's say this is you and you're starting out, or you've been trading and you've been in the business for a while. And what we're going to discuss now are certain milestones to get to the point. Actually, you know what? That's probably bad luck. Even though we're doing this live, let's actually do it the right way. We don't want to put money in red. We want to put it in green. And let's put a big circle around it. Okay? So we have where we are now, getting started on your trader path. And then we have milestones to achieve to get to the point where you're earning consistent money. So we're going to talk about several different milestones that you have to achieve to understand that you're measuring progress. Now, again, I said very clearly in the last video, the number one frustrating part for most traders is they've been in the business for a while. Maybe they've refunded their account once or twice, or they've had a lot of money and they're still in the business 2 years later, but they're not making any progress. They don't have set in stone areas that says, okay, now I should do this. Okay, I'm good at that. Now I can do this. Now I can do that. And we're going to lay these out in a little more detail than we did in the first video, and I'm going to get into them in a lot of detail when we're actually at the presentation. At the Super Conference, I'm actually going to lead the presentation off with this, the different stages of trader development, the biggest challenges, and the proper goals that you should be focusing on so you can get to the next milestone. Now, here's an interesting one. Most people have an account. They open up their trading account. We'll start out with the red there because it's writing the check and put it in the account. And they immediately start trading. Nowhere in here do they have a trading plan, a strategy, or anything along those lines. So along the trader path, I'm going to assume you've done some work to get to the point where you have a trading plan. You have at least something. You say, I look at this and I say, I definitively want to be long or short. Let's cut that out, put that right in the beginning. Do I want to be a buyer or a seller today? Let's assume you did that. Now, funny I say that because most people don't even do that. Most people just say, I have an account. How do I hit the buy or sell button? And then I'll go wait and see what somebody else tells me what to do. So we're going to assume you're prepared and you have at least that. And then at the Super Conference, we're going to help you really nail it down, drill it down so your strategy is so definitive you can tell it to somebody in 3 sentences. That's how big you want to get. All right? First milestone. You don't want to trade more than 100 shares and prove to yourself your strategy works, and more importantly, you can follow it. Immense milestone that most people just zip right past and go to the next one. Why? Oh, I want to trade as much as my buying power shows me, because I saw somebody else trading bigger, because my keys were set on 1,000 shares. Here's the first milestone that's very important. Trade no more than 100 shares. Prove to yourself over 3 months or 3 consecutive months you could be gross profitable each month. Now, we're going to talk about that in peak performance a little bit more too, how to judge your progress from your individual P&L, but this is the most basic thing you should never violate. There's no reason to trade size until you prove you can generate revenue. Okay? Just because you have a bigger bank account doesn't mean you go and rent a 50,000 square foot office. Use your P&L to tell you that you're progressing comfortably. Okay? Never get past this stage. Now, once you get to that stage, the next stage is you start to increase your share size. Now, I'm going to tell you something that's going to happen before it even happens. I've seen this happen to virtually every trader I've been with, including myself. As soon as you do this comfortably and you start to jump in share size, it's going to play with your head because the dollar amount risk is different. And you're going to lose a little bit of money when you first start, because it's going to play with you a little bit, because the share size and the bigger risk per trade is not the same as when you were comfortable with those 100 shares. Now, I can already hear you. What do you mean trade 100 shares? I have $50,000 in my account, whatever the dollar amount. It doesn't matter. Let me tell you something. All the time, I get people telling me, I don't want to pay for education. Well, you know something? I got news for you. You're paying for education, and an expensive one, by increasing your share size until you prove you can generate revenue. You don't want to do that. Prove to yourself in milestone number 1, can I be consistent at least a couple or 3 months in a row, at least gross positive? My God, that's a long time, right? It's not a long time. If you're looking to do this for a career, prove you can generate revenue first. Prove you have a business that makes money before you start increasing to all the other stuff we're going to be doing. So stage 2 is going to be start to increase your size a little bit. And here's the next step. Start trading 2 positions at once. Now, we're going to get into one of the 5 keys is the mindset. If you believe in your core strategy and 2 signals get triggered based on your strategy, you have to get to the point where you take your strategy as often as possible with a little bit more increased share size and multiple positions if it calls for it. Next step. You have to really start to nail down recognizing the type of market condition you're in and how to trade that market condition. Up till this point here, it's been a little bit more stock-specific, strategy-specific, just focused on that entry and exit. As you work your way down now, you're going to start to make more distinctions in the market, where you're going to add the market internals, you're going to add the indices, you're going to add the sectors and the, for whatever stock you happen to be watching. How are all of those stocks trading at the same way, or aren't they? This is what's going to be called trade expectation. Think about it when you're driving a car. The next milestone for you, which we'll call milestone 3 on the post here, is getting to the point where you can make more distinctions to understand and add to the trade expectation of just what's going on over here. Okay, so you got consistency over time, not one trade. Don't tell me I made money yesterday, it's time for me to move on to number 2. That's not the way it works. Okay, start to push it a little bit, start to make more distinctions, and then last but not least, you start to run strategy number 2. What you are going to do now is you're going to increase the amount of ideas you're going to allow yourself to trade, because you've proven you could be consistent with one strategy. You can handle a little more size and multiple positions at the same time. You learn to make more distinctions, so you learn how to have a better trade expectation, which will allow you to handle more share size, because you'll be able to understand what's my best trade versus all the other conditions. And we're going to have a real good conversation at the Super Conference about whether or not you should even take a trade that's not your A trade. There's a lot of talk about, it's not the greatest idea, but I'm going to reduce my share size so I don't get hurt that much during the position. I got news for you. I don't know the hard stats, but most of those trades that I take, I regret. You want to be putting on trades that are your best trades as often as possible, which is your strategy here. Everybody will make an argument, oh, it's a tactical entry. I've done it. I'll do it. I'll continue to do it. We're going to have a pretty good discussion about whether or not it's even worth it, so make sure you're there for that as well. And then the last part, you take what you learned in the first 3 milestones, and again, you can't lie about the milestones. You're either making money for a few months in a row or you're not. Keep your learning curve as inexpensive as possible. Move across to a little more size, a couple of positions. start to make distinctions, add more of what you're watching to the market, and then start to do another strategy with all of this. And this is where you get to the point where you can start allocating more money, and especially if you're a prop trader with T3 Trading Group, you could learn and ask for more buying power because you understand what to do with it. And I'm going to end it on this note. When you've gone through these pieces here, when you've done this, there's a very important question that you're going to have asked to you as a trader or somebody who's backing you, or if you're trading as a prop firm. And I get this question all the time. Would you rather save $1 per thousand on your executions, or would you rather have an extra $100,000 in buying power? I'll let that sink in for a second. Would you rather have $1 per thousand cheaper for your executions, or would you rather have more buying power? Now I got to be as blunt about this as possible. If you immediately said I want cheaper commissions, it means you haven't gone through this cleanly and honestly with yourself, because let me tell you something as a business owner. If somebody walks up to you and says, I have more funding for you, and you don't know what to do with it, you didn't give yourself a good enough chance to get through these milestones, because it means you don't believe in your strategy enough. When you get to the point where you're at least at number 2, number 3, and you're consistently earning money, and you're understanding what a good day is a tough day, and you're pulling back on tough days and increasing a little bit on good days, then you'll understand what to do with more strategies and more capital. And we're going to get into a lot more detail on that when we talk about the trader path and the different obstacles and how to overcome those obstacles depending on where you are in your trader development. That's key number 1. I'll see you soon for key number 2.